All right, hey everyone. Hold on a second. Let me just adjust my microphone. Thanks for joining me for another Greenbridge Investing Market Analysis. This is an update from Monday's session. The goal here is to get a sense of what the market is showing us now, pre-NFP, which is tomorrow, and assess what kind of risks and probabilities that we're looking at based on the price structure now, okay? This is all about price action. So if you're new to the channel, please make sure to share your symbol or the market that you'd like to see now. If it's an altcoin you'd like to see, please put USD after it so that I know it's an altcoin and I don't spend 3 hours on the wrong symbol. All right, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so I am not simulcasting today, and which means I can spend more time on your questions, okay? So whenever you want to put questions in the channel, that's great. So the first things I'm going to cover, we're going to look at Bitcoin, we're going to look at the Nasdaq, we're going to look at gold, and then, you know, some stocks or other markets that you guys want to see. Let's begin with Bitcoin. Now, we had an interesting question in the chat room earlier today, and this would be a good time to address that. And the question was, you know, when do you take this Bitcoin trade? Okay, it's earlier today. Obviously, this candle that we're looking at right now was fully green, so it looked very compelling. It looked like it was trying to break out. As you can see, we're looking at a pin bar now. Okay, this is why I always tell people, wait for the candle to close and you must be patient. Most people don't make money in this game because they don't know how to wait. They're driven by the need to make money. I don't want to say greed, but basically that's what it is. If you have that need to make money, you will fail because the thing is, it's going to invite emotions into the game, most notably fear. So you're going to be afraid that you're going to miss the next move. So what are you going to do? You're going to buy the fake out. Okay. Now, this is a tough area to buy. All right. Now, the market's been acting strong. I've been talking about this in my previous analysis. This area here is the 50K resistance area. It hasn't rejected it quickly, which if it was a weak market, it should have rejected it quickly, has not done that. So we can interpret that as a sign of strength. But it also hasn't cleared the area yet, which means it can still fake out. And the thing you want to avoid is getting caught in this area here, like all the other reactive traders who can't control their emotions or their patience, and now you're all stuck in the pin bar, right? And that's okay if hope mode works out for you, because that's the next thing that most people go into, hope mode. Well, I hope it continues. And this market in general, Bitcoin, the stock market, all these other things, they've been very forgiving for the previous 3 months. Very forgiving. Okay, these markets don't really pull back. So you could just basically buy something, hope for the best, and it works out, right? That's the way it's been. But that's not a viable strategy. And at some point, that hope game is going to run out. And what's going to happen is these supports will break or lower supports will break, and then you get stuck. And now you watch your $10,000 turn into $3,000, right? And that's what you need to avoid. So that's why I always tell people, risk first. So here's the thing, and many altcoins have shown consolidation breakouts while Bitcoin was a little bit of a lag to get this thing going here, right? Because meanwhile, Ethereum was making the run for it and all the hype on Ethereum. Okay, fine. Now, it doesn't mean you have to avoid those type of trades. Now, personally, I don't like those type of breakout trades. I don't have the patience or the time to sit here and babysit, okay? But some people do, and that's breakout strategies that's a viable strategy. But the thing is, you need to understand the risk you're taking and how to manage the trade and adjust if the breakout fails like it is doing right now. Now, this candle isn't closed yet. It may close strong. So at this moment, if you took the breakout, there's really nothing to do here. Okay, I mean, if you read in the trade, you're red. But the question is, where is your stop? Now I'm talking from the swing trade perspective. Your stop based on this structure should be around 46 even. That's where the stop should go, around there somewhere, okay? Because that's where your minor support is. And there's a good chance that that thing gets tapped out. So you're looking at maybe 4, possibly 5,000 points of risk, depending on where you got into this thing, right? And that's it. So you can either wait for that to get taken out, and you should have a stop there, so you take the loss, or you want to make an adjustment early. That's where the babysitting is involved. If this thing closes like this, and we take out the pin bar low, which is what, 49, basically 49 even, this thing takes it out, you have a choice to make at that moment. You can bang it out and take a small loss, which is usually the more conservative thing to do, or more effective thing to do, because now you're cutting off all this risk that this thing, you know, can test 46 or go lower. You're cutting all that risk off, and you can always get back in at some other point when a new buy signal develops, right? That's the effective thing to do. Hope mode is what most people are going to do, and they're going to hope that it just stays in this consolidation and breaks out. Like I said, it's been a very forgiving market. It may work, but if it doesn't work, you're going to be at the mercy of the market, and that's when you open up the opportunity to lose a lot of money, okay? So that's the breakout idea, and many altcoins are in a very similar situation. We looked at DOT, we'll take a look at them again. Uni, FIL, a bunch of them looked very similar, right? Following Ethereum, the Ethereum breakout. And if you take such a breakout, and it goes vertical like that, right? And it just keeps going. Well, at that point, you just let it ride and wait for a reason to exit or take partials, right? At least 1-to-1 reward risk is when you should start taking partials off the table. Again, from a swing trade perspective. Now, let me address the averaging or the inventory perspective, because that was part of the question. It's like the question was, well, when do you get into this? And the other thing is, you know, do you wait for 44K, or you know, how do you deal with that fear of missing out, or what's the advantage to averaging? Usually people that are averaging outperform shorter time frame strategies, okay? And that's true. Why? Because first of all, averaging, you're not placing many trades, first of all. Second of all, you're working from an average price in a very big picture. Now, that all sounds good, assuming you're on the right side of the market. What if you were averaging on the short side all during this? Well, that strategy isn't working out for you, is it? Right? We don't short this thing, but I'm just saying. Or what if, let me give you another scenario. What if you started buying Bitcoin around 60K on this pullback up here, right? After it touched 64K, you went on YouTube, you followed some fake guru who said, this is just the beginning of the bull market. So it pulls back to 60K and you buy it, okay? But you go in with the idea of averaging, not buying the full amount. So here's the example. You have 10K, okay? And your plan at this point, and again, this is after the fact, of course, I can say this, but let's just see how this would have worked out. 10K, your idea or your plan is to invest $1,000 or 10% of your 10K every 5,000 points. So you started out, you invested 1,000 at around, what, 60K, whatever, wherever 60K is. You invested another 1,000 at 55K. You invested another 1,000 at 50K. You invested another 1,000 at 45K. Okay, so instead of being all in, you're just doing 10% at a time. By the time this thing reached 30K, you were 70% in, not even 100%. Okay, 70% in, which means you have $7,000 invested at this point, and it's against you. But your average price at that point is 45K, which is what? Where is that? That's around this area right here, 45K. That's your average price at that point. And in this scenario, you're green because this thing's fooling around 50K. So on the average, you're 5,000 points green. So that's the idea of averaging if you're averaging increments, and you don't have to worry about the specific price. So with that 5,000 thing, I just took that, that's a random number, right? There's no plan in doing that. I'm just saying if that was your plan, you would be green now because generally Bitcoin is in a broader bullish trend and you would be taking advantage of a pullback. The advantage to averaging is you don't have to worry about specific prices or specific stop losses because you're managing your risk with your size, okay? So you're taking small bites and you're averaging into an average price. Over time, if you're on the right side, it will generally work out. Now, you could have done that from Bitcoin when it was at 20K. It went all the way to 3K. Now, are you going to be able to handle all of that? All right, or what about, we talked about here, 60K or 65K to 30K. That's over 50% pullback. That's the thing that you have to deal with when you're dealing with averaging. So what protects you from wiping out your account is, for one, small size, small percentage, and not using leverage. Because leverage is what will wipe out your account. You have to make sure your position sizing is appropriate for that type of plan. So that's the contrast between the two. So with averaging, you're not waiting for a specific price. You can buy some right now. If it pulls back, you're going to buy some more. If it pulls back more, you're going to buy some more. But proportional to your account. $1,000 is 10% of 10,000. You don't have to do 10%. You can do 5%. You can do 3%. That part you have to figure out what's appropriate for you, okay, and what your longer term plan is, assuming Bitcoin stays in the broader bullish trend. Now another thing to keep in mind is if it's pulling back, let's say Bitcoin went to 25K or maybe went lower, you don't have to keep buying, right? Once you reach your allocation, you wanted to invest $10,000 and it's all in, that's it. You don't keep putting more and more and more and more, especially in these highly speculative altcoins, which are basically worth nothing. There's just all perception and it's all a lot of hype baked into this. So that's why it's not a very good idea to risk a large amount of money in this space. Okay, you want to throw in like $1,000 and you want a dollar cost that and this and that with your altcoin, okay, fine. Because if you turn your $1,000 into $5,000 or $10,000, hey, that was a great investment. And if it went to zero, okay, you can handle $1,000 loss if that's a small amount for you. But throwing in $100,000 is nuts for something like this. That's really the place for more of a conservative type of stock. That's a proven company that pays dividends, all those type of things. That's really where you want to put larger amounts of money to work. Okay, in my opinion, anyway. All right, so that's Bitcoin. I know I talked a lot about that there for, 12 minutes. Man, I talk too much. All right, let's get into the Nasdaq. I see people typing stuff. Thanks for your questions. I'm going to get to them. Let me just say hello to a couple of people. Happy, good to see you. Savi. Oh, by the way, if people want to just share what country they're from or what city you're from, it's always nice to see. I'm broadcasting from the greater New York City area, northern New Jersey. Some of you know where that is, and that explains my accent. All right, hey, DJ, good to see you. Okay, cool. It's good to see you back. Sean, hey, good to see you. Cool. We'll take a look. Well, this area has just been, northern New Jersey. It hasn't, I guess there's some water around here somewhere, but not in my area. Good to see you, DJ. And Reese, hey, Reese from Western Australia. Man, that's like, again, see, Reese is a real trooper. He comes in here like 4:30 a.m. his time. It's crazy. Schwartz, I got my Romanian representative, Schwartz, good to see you. Hey, David, all right, Douglas, DJ, all right, Abraham, okay, cool. Alex, good to see you all. All right, so let's talk about the Nasdaq real quick, all right? I'm not going to spend a whole lot of time on that. Remember, we have NFP coming out tomorrow, non-farm payrolls, which is the most important economic event we have scheduled each month. Now, in recent months, any negative news, right? If there was any negative news on NFP, it's been completely shrugged off. I mean, look at this market. This is the Nasdaq. And this, let's go back here. Let's go back to June, right? This is June. Went back here, June. And we've just completed August. That was the summer. I mean, talk about a generous market, right? You could have just bought on June 1st and held on and look where you are, all-time highs. Anyway, of course, it's easier after the fact. My point is, we have NFP tomorrow. Now, this price action isn't that surprising going into a non-farm payroll report. We had ADP earlier today, which is sort of like a prelude to NFP. I don't pay attention to the outcome of those numbers as far as whatever they report in the news. I'm only interested in the price action, okay? And we're off of all-time highs. We have a red candle up here. We have a couple of pin bars. Now, this looks tempting to short, but the thing is, this market has been very hard to short. As you can see, any short attempts that you made over here, you got stopped out or you're still in taking a lot of pain. So, I mean, how much further is this market going to go? There's no way to know, right? These are all-time highs. It's a stimulus market. It's a lot of talk involved here, and it's also a low-volume holiday environment. Keep all those things in mind. So whatever the outcome is for NFP tomorrow, I mean, maybe we get a range expansion, maybe we don't. I'm not really that interested in the outcome. I'm only interested in levels, okay, at this point. The trend is easy to see, so there's really no question about trend. It's bullish, okay? So that goes for the S&P, the Nasdaq, pretty much the broader market. Anything that's, broader market, an index. Our first support on the Nasdaq right now is, what is this, 15,183? So basically like that 15,150 area, that's an old resistance, new support. That's the first place to consider. Stocks, if you're interested in swing trades, at least the market is giving you some probability of turning in your favor, okay? Now, not all stocks are going to follow that. I'm talking about the higher correlated stocks, like your typical semiconductors and, all those other market stocks that everyone likes to make a big deal out of. Apple, the FANG stocks. The next support is 14,850, right around there. So, people want predictions. They want, well, where is it going to go? There's no way to know if it's going to pull back to the first support or the second support or lower. It depends if there's a catalyst that comes out of nowhere, all that other stuff. So all I can do here is figure out the levels that are of interest, like these two levels, and then wait to see if price gets there. If price gets there, then I have to wait to see if price confirms what I'm anticipating, meaning like a bullish reversal in this case. Maybe price tries to reverse and fails, right? And then goes lower. So you have to be prepared for that kind of thing, and you have to keep that in mind when you're looking at swing trades for stocks. So speaking of swing trades, a recent trade of the week was Bumble, right? We sent this out like what, 2 weeks ago or 3 weeks ago? I sent it out, and it's first. I remember DJ. I remember you asking me about this. You're like, "What's up with Bumble?" I'm like, "I don't know, man. I'm sorry." Because it tapped everyone in. I think it was right here, and went red. Right? It was like $3 in the red, like the same day. Now this thing is closing on its high. Look at that. Nice, right? I think it's reached the target or so, or two. So that trade idea was dependent on a supportive market. Well, we got the supportive market, so it's nice to see Bumble doing its thing. And today it closed up, what, 248? Nice. Okay, but that wasn't exactly easy to hold. It was bumbling around for a little while, right, before it went. So just to kind of give you an idea of a swing trade, working in this environment, they're not easy. And also, they're not very frequent. I know people are losing their patience. It's very frustrating, but waiting is really the name of the game. August was a tough month, in my opinion, as far as swing trades go, because there's so much uncertainty and so much, not only uncertainty, that's really the wrong word. It's more of indecisiveness, right? There's a lot of that. So let me just show you real quick. Before I go to gold, let me show you this, right? Because I always keep an eye on this, the bond market. Obviously, there's some kind of adjustment there. I wouldn't put I wouldn't give that gap any credit. There's really nothing behind that. I believe that's just a contract adjustment. But the point is this, right? This bond market, if you look at a weekly chart, there's really, if you look at the progress or lack of progress, this is the weekly bonds, okay? Bond futures, 10-year note. This is the previous month. Look at this. It's made no progress over these 4 weeks. It's basically fooling around in the same area. So what does that mean? Well, so far, the lower high is still intact. If that stays intact and this thing starts breaking supports, and NFP would be a good catalyst for such a thing, then we're looking at rising rates, right? And that seems to be a big conflict for the market. Let's take a look at the US dollar real quick, because this is especially important for gold. Look at the dollar. So the dollar, this is a dollar on the weekly. Now the dollar tried to break out over here and failed right away. That's usually what happens when something touches a resistance. It rejects it pretty quickly. Look, it spent the whole week rejecting it, and all of this week too so far, rejecting. Okay, now we're going into a support area around, what is this, 92 area? That's a pretty significant support, 92, and it's sitting there right now. So if there's any type of, maybe there's a catalyst tomorrow that turns the dollar around, I don't know. But at this moment, if the dollar can't hold this support, the dollar index cannot hold this support, then you're looking at inflation, right? So that's the conflict that we have between like the bonds, the dollar, and things like gold. So we have to wait for a decisive market. Now let's take a look at gold real quick. And let me go back to the daily chart. Okay, so here's the thing. Gold is a very opinionated metal. People like to think, well, because of this, gold should do that, and blah, blah, blah. But keep in mind, it follows the same random nature as every other market. You can't really apply logic to these things. So pay attention to levels. Gold has been flirting with this resistance area, okay? 1830, 1825 area, that area right there. Not a good place to be buying gold. So I don't care what they're saying about inflation or non-inflation or whatever economic nonsense that they spread, really doesn't matter. What you should be paying attention to, especially as a swing trader, because we've had some recent buy signals in this thing. We didn't take any of them, especially the one near the resistance. You should just be paying attention to levels, all right? So look at the support. There's a support right there, which it came off of about a week ago, 1792 area. That's one possibility. Not my favorite, but it's a possibility. And then you have one over here, which is the 1750 area. That would make more sense. Now, is gold going to go there? I don't know. We're prepared for if it goes there. Keep in mind, gold, and I always go over this with gold, gold, this pattern that you see on gold going all the way back a year, okay? Back up here. See that part on the chart? A year. That's a year. Gold has really made no progress. That's a big, gigantic wave 4 consolidation when we're talking about Elliott wave. People think a wave 4 is just, oh, we got to pull back. That's a wave 4. Okay, we're going to go wave 5, blah, blah, blah. But this is a large magnitude wave 4, something that I also believe Bitcoin is in as well until it proves otherwise, okay? And in order to prove otherwise, Bitcoin needs to take out 64K. So it has all that room to fool around between 64K and 30K, and that could be a wave 4. Just like this gold situation. They're very tough to trade, and they can throw a lot of people off. So that's why, look, you don't have to be an Elliott wave expert to navigate this environment. Just pay attention to the support and resistance levels and keep your expectations realistic, okay? That's the thing. All right, so those are the 3 markets I wanted to cover. How am I doing? I talk too much. I talk too much. I want to get them finished sooner. But all right, let me get to your questions now. Let me see what we got here. All right, so first one, Happy. Can you please take a look at oh yeah, IOTA. Is that IOTA? IOTX? Yeah, I saw this earlier. It was up some ridiculous amount. I'm like, oh, look, they're paying attention to IOTA. I don't know, maybe that's not the same as IOTA. But IOTA was up a ridiculous number. And that's a garbage coin. Okay, I'm sorry, it's a garbage coin. So let's take a look at this, IOTX. And here's the thing. So when you see something like this, right, this gets all the fake gurus' attention and all the YouTubers. We were talking about the other day about the thumbnails because people were suggesting that I should come up with better thumbnails. And I was saying, yeah, I'm going to get blue eyes and I'm going to do that thumbnail picture where, you know, they have that look, that look in their face with like they look like they just got hit in the face with something. Anyway, that's usually when you get those, right? When you get this type of move. Now, let's take a look at where we are now. So you have the pullback. Okay, fine. What are our levels? Let's see. You have a support right in that area. Your next support is around there. So let's talk about those. So you're gyrating, if you notice. This is gyrating around this support area, right? Notice? So you can say that this little area right here is a minor support. What price is that? 7 cents about, okay? That little minor support there. Now, it's trying to come off of that, but you're in a consolidation. Now, this is where things can get tricky. If this minor support breaks, you're looking at this support of 5 cents or 5.5 cents. That's what you're looking at. So that's one way to define your risk. If it breaks this minor support and you're in, because for something like this to make money, you have to have a sizable, a decent position, right? So you might want to bang it out and take the loss if it breaks this support. Now, you do have a buy signal in here right now at the moment, but it's a tough buy signal to take because this is not exactly the best pattern you want to see. All right, that's not a high or low. The broader pattern is a high or low, but this is just, it's sort of a double bottom, and it's not doing well off the double bottom. The next candle should kind of look more vertical than it looks right now. Maybe it will catch up at some point, so you have to decide if you want to take that risk. But while the location isn't horrible, right, it's not a horrible location, keep in mind, until you clear this range high, it's going to give you a hard time, right? Now, again, we have to assume that all these coins, when the hype comes out of them, because that's all this is, hype, that's the herd mentality, pure herd mentality, and you want to avoid that. After it pulls back, this is a time to start looking, okay, fine. So what you want to do is you have to assume that this thing is not going to lead, okay? Bitcoin is the leader, Ethereum is a leader. So if Bitcoin and Ethereum pull back, this thing is likely to break that support. So you have to use those as your guide, all right? Which means you can take a more aggressive trade and get in with that stop around there, or you can wait for the breakout attempt and then try playing that, with a stop again around that support level. Something like that. Of course, you're going to need Bitcoin or Ethereum. Both of them most likely will have to be going your way, and maybe you get the next leg higher. Either way, you need to justify that risk that you take. And so most likely, if you're risking, let's say you buy the breakout, right? Let's say you buy this price here. What is that? Basically 863, 0863. So let's just say 0870, okay? Let's just say that's the price you take. You need to make, if you're risking about a penny, is that about a penny? Let's see, 076. Let's say something like that. So let's say you're risking about 1 cent, maybe 1.5 cents. You need to make at least that, okay, to justify the risk, which is possible if this thing goes for new highs, okay? You need this thing to go for new highs up in this area, the high 10s or whatever, or higher. If you can get that next leg, it's worth the risk, and then you can see if it rides, if it goes, okay? But most likely when they get into these consolidations, and if Bitcoin doesn't follow through, like I keep saying, you don't want to get caught in these things. All right, so anyway, thanks for asking. Let me see what else. Savi, okay, what is your opinion on Fibonacci retracement for ETH? Okay, good question. So let's take a look at Ethereum, especially since it's, it's kind of led a lot of this rally. Let's take a look. Let me get Ethereum on here. Ethereum chart, here's one. Okay, so as far as fib retracement goes, here's the thing with fib retracements, right? I know everyone likes to make a big deal out of them, but the fib measurement alone really does not provide any distinct advantage, okay? So based on this structure right here, you have the 382 area around what, 29, so basically 3,000, right? 3 even is where you have a level. So how that is helpful is you can use that to basically just give you more weight to the level, because other people are going to be looking at that as well. But the thing is, you can arrive at a similar conclusion if you just look back at previous structure, which is here, right? Old resistance, what, 2890. So it's about 100-point difference, but it's the same idea, okay? This entire area is going to be support on the pullback. And that's really, what you're looking for anyway, whether you measure it with a fib retracement or not. So don't put more into it than really what they are. It's a measuring tool, and it gives you some specific levels to go over, but you have to make sure you measure the right thing. A lot of people, I don't know where to get these complex measurements from, but the simpler you keep it, the better. I think the greatest advantage to using fibs is really when it comes to projections, because that's when you don't have any historical price action and you're trying to get a sense of proportions, right? And I think they can provide a lot of value in those situations. But anyway, this consolidation right here is a major area to be watching anyway. So Ethereum right now, 37 whatever, right? It's minus 39 points. I think it was minus more a little earlier. Look where you're fooling around. This is an old resistance area, okay? So I saw some YouTube titles that this thing is going to 10,000 and blah, 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 blah. This is where you're buying it if you're following those fools that keep saying that kind of stuff. Now look, I understand everyone wants to be a guru. I understand that they're trying to run a business. Okay, but when you're selling hope to people that are going to be caught in these things, then that's where I have a problem. I think it's unethical. If you're if you're selling makeup, or if you're selling, men's styling, or you're selling dating strategies, and you want to sell hope to those people, okay, fine, but at least you're getting some kind of product. Maybe not for the dating strategies, but you're getting some kind of product, right? You buy some makeup, you're going to use it, you're going to put it on, you paid for something. You're not buying just false hope. That's the problem that I have with these fake gurus. Half of them don't have the experience to be teaching others or showing others what to do in these environments, to be honest with you. All right, anyway, so they're more like, they're marketers, and they should really stick to a product that, like makeup or something. Anyway, so that's the situation with Ethereum. Very high risk area to be buying it. It can fail here. All right, that's the problem that I have with it. I don't care what they're saying fundamentally. I don't care what their new thing is going to be, or their update, or their upgrade, or blah, 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 blah. When the money comes out of these things again, you're looking at the support levels, okay? And those are the levels. So, let the market determine, not some big mouth. Anyway, that's Ethereum. Thank you for asking. Man, I need to speed this up because, man, I'm only on question number 2 over here. Schwartz, okay, Romania. DJ, okay, cool. Sean, glad to hear, okay. DM, let's take a look. DM, I guess that's a stock, right? I'm guessing it's a stock. Let's take a look here. Oh, yeah. So interesting. Let's look at the bigger picture here. So this is an interesting situation. The stock has been out of play for some time. All right. Now these are interesting because when they come back into play, this is right now you have an opportunity to get involved in some of these things at good prices. So let's take a look further. You have this bearish consolidation. I call it bearish because you have a series of lower highs and lower lows. You have a resistance right here, okay? That's your most recent resistance. So now let's work with that. Recently, right, over the recent couple of weeks or whatever, you made a lower low. And after that, this thing found a higher low. Okay, fine. That is a possible change or some structure, right? Stability, like we like to call it in the chat room. And today's candle, decent candle. All right, that's what you want to see from that type of situation. The thing is, buying this right now would be aggressive, or I think too early, because you're still fighting this resistance up here. So really, in order to prove itself, it needs to clear that resistance and then give you the pullback, right? That resistance, by the way, look, goes all the way back to here, right? So you have that whole area, old support, new resistance area. So you have to be careful of that, right? That's a really tough place to buy. People get very compelled by something like this because, oh yeah, look, got the higher low, got the higher high, okay, it's changing. And it might be changing, but look what you're buying into, right? You're buying into that. So in this situation, you have 2 choices. You can wait for the next higher low, meaning let this thing, if it wants to be green tomorrow, whatever wants to give you a little more green, let it pull back again and see if you can get another higher low somewhere in this area, which is what? $8.35, 8.25, that area right there. Perhaps it gives you that. Maybe it won't. Okay? But you're either looking for that, or you can wait for the breakout and then see if it pulls back after that. But taking it in between is tough. If you want to go for that, for example, you want to buy it now, on this high, your risk can be defined at 793. You figure like give it a little room, right? 780, 770, something like that. So you're risking about $1, a little over $1 if you buy it now and hope that that momentum continues. But like I said, you're going right into that resistance. So you might want to wait for another buying opportunity or pullback. Maybe the next pullback breaks this and goes lower and gives you a double bottom, okay? Which, hey, that would be worth, if you're going to give it a try, at least that would be a more worthwhile try, in my opinion. All right, kind of like this back here. Look at this, right? Nice double bottom. It went somewhere, and then it gave it all back. So just keep in mind, just because you get a reversal pattern doesn't mean that, this thing is, okay, going back into a bullish trend and it's going to, be the next Amazon or whatever. You understand what I'm saying? All right, so thanks for asking. Great question. I hope that helps. Okay, let me see what else we got here. Schwartz, what do you think? Sell Ethereum now and wait for a pullback and rebuy, and same for Bitcoin, or just hold them? Okay, Schwartz, good question. Let's go back to Bitcoin. So here's the thing. Do you sell? Do you buy? Well, it depends really what kind of position you have. Are you in a swing trade? Or are you in a position trade? If you're in inventory, if this is inventory, meaning you have a bunch of it from lower prices, there's really no reason to sell. Okay, yeah, there's a pin bar here and all this and all that, but this is all minor, this is all minor price action. There's really nothing, there's no major sell signal here and all that. Maybe this thing pulls back, but the risk you take if you get out now thinking it pulls back is, what if it doesn't pull back? What if you never see that 44K? That's possible. So that's why you have to decide. Is it a swing trade or is it a position trade? Position trade, you shouldn't sell. Not yet. Position trades, really, the idea behind a position trade is you don't sell all in, all out with a position trade. The idea is to manage inventory. So when it's on highs, you should unload some and lock in some profits on your inventory. And when it goes vertical, you sell some more, right? And that's all you do. You just until you're out of it. And then when it starts pulling back, you start averaging in again. That's the position trade idea. For a swing trade, it's a different story because you usually have a larger position or something like that, and you're really more focused on the direction or the more short-term movement, right? So in that type of situation, I mean, there's no reason to sell yet if you're in from a lower price, but one may develop soon, okay? Meaning we take out the low of this current candle. That would be a sell signal, and it would call for an adjustment, especially if you try to buy into the breakout and it's not working. All right, so, but I wouldn't, in this situation, I wouldn't sell like all my holdings and think, yeah, I'm just going to buy the bigger pullback, because it may be some time before that bigger pullback develops. It's very hard to time when you're talking about inventory. That's why you're just better off just, when you have low prices and a great opportunity, that's when you should be accumulating, okay? Or putting more weight on your accumulation. Instead of buying, $1,000 worth, maybe you're buying $1,500 worth, or maybe slightly more, of course, proportional to your account, at lows rather than highs. And when you're near highs, like we are now, a resistance, you buy less, right? So it kind of skews more toward better prices if the trend continues to be bullish. And I mean, when you zoom out on Bitcoin, there's nothing really bearish about this trend. There's nothing bearish about that. This current move up may be, just like I said, part of consolidation. So not a bad place to take something off the table and capitalize near the highs of a consolidation. But that's not a bearish trend, okay, on the bigger picture. So at this point, averaging into a situation like this still technically makes sense. But always keep in mind, when it comes to averaging, you want to have a fixed allotment, like your fixed amount, a target allotment, whether you're investing $10,000, $50,000, whatever it is. Don't go beyond that point. Once you're fully averaged in, you're all in. Okay, that'll protect you if this thing goes to zero, because whatever you've invested, it's going to go to zero. Right? That's the way you have to look at these things. I know I'm exaggerating. Bitcoin is not likely to go to zero anytime soon, but that's the kind of risk you have to be open to when it comes to these and all the garbage altcoins that follow it. All right, again, this is not a quality stock like Intel or Microsoft, or you know what I'm talking about. All right, so thanks for asking. Let me see what else I got here. So, all right, Schwartz. David, from Miami. Oh, that's nice, Miami. How often do you stream? Douglas asks. Well, Douglas, I stream 2 days a week, usually Mondays and Thursdays. And I try to stream on TradingView also, but I've had a hard time with they've changed something on their server, and I don't know, I've been having a hard time with that. But that's usually when I stream. Okay, DJ, according to many Farouz, bull market is about... Oh, really, DJ? That's interesting. Bull market is just about to start. DJ says that all the fakes are saying. Great, just about to start. Where were these geniuses at the 30K area? Where were they? Why wasn't the bull market just about to start there? Why is it just about to start now off of a resistance area? That's what I mean. When you're watching those other videos, I think a good strategy is to do the opposite, or consider the opposite of whatever they say. Because keep in mind, they're appealing. Think about their role. Think about what they're actually doing. They're amplifying the herd mentality. Their message appeals to the emotional need of the herd. The herd is usually wrong. So whatever they're doing is probably wrong, right? And I'm not just making that up. All Forex brokers, their business model is based on exactly that idea. They take advantage of 80% or 90% of their population who is losing money, and they're taking the other side of those trades, okay? And the percentage of their population that's making money, they hedge those trades. So, you know, betting against the herd is a sensible strategy. So use it in that regard, all right? Okay, so thanks for mentioning that, DJ. I can talk about that kind of topic for hours. Okay, Jenny Jr., for swing trade purposes, could you please elaborate on the confirmation of price action on a lower time frame after all? Okay, good question about lower time frames. The thing is, if you're not, lower time frames are more appropriate for a day trade. Okay, so like if you're looking to get in and out the same day, you can use your 4-hour chart, you can use your 1-hour chart, you can use your 15-minute chart, right? The confirmations are appropriate for that proportion. But for a swing trade, you really shouldn't use less than like if you want to use a lower time frame, use like a 12-hour, okay? 12-hour makes sense on something like this. You don't really want to go lower than an 8-hour because it just becomes too noisy and too random and it's unreliable. So in that situation, we rely on the daily candle for our confirmation. We don't sit there and go to, let's check out the 4-hour chart because we're going to get better confirmation. No, you're not. You're just going to get a random signal. So don't be confused by that. If when you have a strategy, you have to stick to one time frame as far as confirmation goes, right? So if it's a swing trade strategy, you really should just rely on the daily chart and just go with that. Otherwise, you're going to have a lot of false breakouts, a lot of false trades, and it's just a waste of energy. All right, so thank you for asking. DJ, 15 call, March 2022, 62 cents. DJ, what are you talking about? Oh, when are we going to buy some SQQQ? You know, I stopped, DJ, if you notice, I stopped sending out SQQQ signals because it's just ridiculous, right? First of all, I sent out a bunch, March, I think again in April or May, and the market has just been relentlessly, I showed you that June chart, higher and higher and higher and higher. Is this the top of the market? It's a gamble. Honestly, DJ, it's a gamble. Because, I could sit here, you have to use the Nasdaq chart really to make that decision, right? Not the SQQQ chart, as you know. And if you want to take that chance, are we getting a sell signal up here? Possibly. We have a few tails up there, right? Possible pin bar. But we also had a sell signal a week ago, right? Over here. And they just kept buying it, right? Because remember, we're in a market that sees there's no such thing as a pullback. Pullbacks are obsolete. Pullbacks are just so 10 years ago. Who needs pullbacks anyway, right? Anyway. So just be careful because you're in that stimulus market. Those are cheap calls. So if you're going to do it, 62 cents per contract for a 15 call, and you're going to need a really dramatic move. Where is SQQQ again? Let me see. This thing is at 7. You need this thing to double, right? So you need a very dramatic move. The Nasdaq will probably have to give back 2,000 or 3,000 points, for you to get anywhere with that. So again, that's just a total gamble, and there's no way to know if that will pay off or not. But I'll tell you, 62 cents is not bad. I paid $2.50, and you're talking about what, a year, over a year worth of time. That's not bad. So in terms of reward risk, you have at least that in your favor, and that's pretty cheap for that much time. So not a bad idea. It's just I would consider it aggressive. Okay. You're just betting on a market top or a market peak soon, and hopefully it pays off. But again, 62 cents, not a bad price. So thanks for mentioning. Elijah's from Lithuania. Okay, cool. What's your thoughts on ABV? Okay, okay, let's take a look. Most likely it's news. Oh yeah, that's obviously news, right? So never mind the news. That's a pretty massive candle. So when you see something like this, right, big candle, hopefully you're not caught in that, but when you see that, obviously something came out that was unexpected. And threw all these people off, right? So you have to look at the support levels first of all. Where are they? Well, these are your support levels. So you have, what is this here? 109. You could probably round that to 100 even. What is this here? So around that 110 area, something like that. And this thing right now is fooling around. Okay, so you have basically, it's sitting around a support. So you have basically 110 and 100 even, right? Those are your nearest supports. At this time, in these type of situations, as far as inventory goes, you know, you want to take a small bite. I mean, I know they're a pretty well-known company, and you know I believe they're a leader in their industry. I'm familiar with them. Andrew's called a number of trades on this stock. You know, you have to be careful as far as taking the small bites because there's no stability right now. You have a pin bar, right? You have this pin over here, this tail, but that doesn't mean really anything at the moment. You need stability to develop. Let me show you an example of stability. That means it needs to consolidate kind of like this, which can take a month or longer. So as far as, you know, putting on a position, you want to take a small bite now just to take a small bite at a lower price, okay, but don't size into this thing. Don't buy too much inventory too fast. There's no stability yet. Okay, especially if it breaks 100, right? You may see much lower prices. I mean, let's take a look at this thing. Let's just zoom out a bit and see how far can this thing pull back if 100 is cleared, right? You're looking at, what is this here? Is this the 100? This is one, yeah, that's the 100 level about there. How much lower can this thing go? You're looking at like this, what is this over here? You're looking probably in the 90s. Right? What is this over here? Yeah, 90 area. So you want to be prepared for those type of prices if this thing can work its way back. Usually when you get this type of pronounced move, like I said, that could be the beginning of a new trend, right? That could be the initial leg, and that new trend may be bearish. So take your small bite and then see how things go with those next supports if you want to take small bites there. As far as any other type of trade, like a swing trade, don't even think about it. There's no stability here. At this moment. Let this thing stabilize. All right, so I hope that answers your question. Anton from Siberia. Siberia. I think you're the first. I had a guy from Russia here recently, but he didn't say where in Russia. You know, sometimes they can be secretive. But Siberia. I've heard some nice things about Siberia. Okay, DJ bought some ADVM, Gamble. All right, let's take a quick look at it. DJ bought some ADVM at Verum. Okay, so biotech. All right, I could see. Look at this. Wow, this thing got gapped recently, right? And spent a few months here just sitting at these uneventful lows, out of play. No one's paying attention to it. That's a good thing, all right? As far as price structure, yeah, nothing's really going your way just yet. You have this little higher, this lower high attempt break. That's a good start. So I could see, right, you know it's a gamble. That's fine. Okay, because yeah, that is risky. The situation with this is you want to see it clear that resistance. It's got this gap right here, so you definitely want to see that gap get closed. Those would all be good signs. And then higher lows from there may start to develop. You have a resistance right here, which is what, $3.56. So that would be a place to maybe lock in some profits if you have some, or you know, wait to see if it breaks through there. If it can clear this lower high over here, which is 379, right, those high threes, then you have I'd say you have a confirmed change in structure. And this thing maybe working its way higher at that point. I can tell you that usually a gap, look at this gap. A gap can act as support or resistance. In this case, you're looking at a resistance. So around that 4.25 area is also an inflection point to keep an eye on if this thing starts working its way back up, okay? But definitely aggressive, and there's no swing trade signal there at this time. So thanks for mentioning. Good. These things are good for the radar too. Okay, Sean, Hood. All right, so Robin Hood. Hood, they call themselves, right? Hood. That's a very encouraging symbol, Hood. All right, anyway. So what do you have here? We all know this is Robin Hood, right? The stockbroker. And this thing has pulled back since its IPO, which wasn't too long ago. Of course, a lot of people got caught in that one, think, well, it's Robin Hood. They can't be losing money or anything. Right, okay, nice job, people that bought the top of Robin Hood. Probably all Robinhood traders. Anyway, you have a double bottom right there. Higher low, double bottom. So Sean, if you're going to get involved in Robinhood, this is the place, right? Also, notice that you have this gap over here. See that gap? Notice the price stability didn't form inside the gap exactly, but it's close enough. I mean, that's pretty close, right? It's fooling around in the area. So you have those things going for you. But most importantly, this structure, right? Higher low. The higher low is what, 41.5? You have a, what is this candle here? This bearish pin bar. I wouldn't worry too much about the bearishness of that pin bar because you're coming off of a double bottom, right? And you have this little inside bar today. So risk can be defined basically at that 41.5 area, and this thing's at 44.5. So you're looking at a couple of dollars of risk if that support can hold. Now keep in mind, something like Robinhood, this thing may be, I don't know how correlated it will be to the market. It is a stockbroker. So I would imagine if the stock market starts getting beat up, I would imagine, and again, I'm using logic, which is not always a good idea, but I would imagine that this thing will feel some pain as a result of a stock market getting beat up. And the stock market has been in a position to get beat up for some time. So that's what you have to keep in mind. If you take a trade like this and it takes out that support, just take your loss, right? Don't get stuck in this thing for that reason. If this thing takes out this high of 50 or whatever, 50.25, then this thing has some room to run, all right? And of course, you want to be locking in profits or getting out of stuff in this area right here. Don't try to wait for these all-time highs because especially if you get a weaker stock market or the stock market starts to change, because again, it's really overdue for a significant pullback, it may be tough to get out at these levels. So you want to keep your expectations reasonable on something like that. But stock market aside, it's not a bad structure and it's not a bad setup. It's not a bad idea. So thanks for bringing that one up. Certainly fits most of the swing trade criteria. Okay. Nice look on DJ, but when do we ever pull back in this absurd market? Right. So I know, Sean, you've been asking about that, and it's a matter of catalyst, really, right? The market, you have to keep in mind, the market's been in a low volume, holiday type of environment for weeks and weeks and weeks. On top of that, we're getting no clarity from the Fed, okay? They've been very vague on their interest rate talk. They seem to think that there's no inflation. They seem to never want to, put any kind of controls on any of this, and they just want to let the party continue. I don't know. I mean, I have not, this is just, it's hard for me to make sense of. But again, I try not to use logic, right, in this decision making. It's like the Fed is doing whatever they're doing. I don't know how they make their judgments. I don't know, why they're doing what they're doing. But as long as they keep doing what they're doing, this market's going to have a hard time pulling back because all they're doing is they keep putting more and more money in the market. Right? That's why I keep such a close eye on the bond market, because a lot of times they control things. They call it, what do they call it? They call it asset purchases, or there's a name that they call it. And it's the Fed actually goes into the bond market and buys and sells bonds. Right? So that's one way that they control how much money that they're putting in or taking out. And they're not taking out any money. Right, so when they start buying bonds, they'll be taking out money. And as we took a look at that bond market chart a number of times, there's nothing going on there. So when you see that in a pronounced way and rates rise decisively, that's when you'll see the market have a hard time going higher. But until then, maybe a random catalyst comes out, and starts to put the initial weakness in, right? You have to understand something about a market top and a market bottom. They're usually not a single event, okay? Usually something will occur that will take it off its high. Like, for example, Bitcoin came off its high at 64K, and it tried to rally, sometime. It didn't just go from 64K right to 30K. It tried a few times, blah, 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 and then eventually things came along and it broke, right? Well, I think one of the things that came along, Elon Musk was no longer going to accept Bitcoin for the Tesla car, whatever. I think that was the one that was the piece of news that pushed it below 60K, right? Until then, it was just all hype, and now the bull market's going to continue. Bitcoin will be at 100,000, blah, blah, blah. Coinbase is going to come out. It's going to be a Bitcoin forever, blah, 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 right? All that nonsense. And then it went to 30K. So you can't really, a chart can't really help us time that top or bottom. The top or bottom needs to be established, and then we can measure from there, or at least we can start measuring risk from there and determine if it's worth taking or not. But trying to catch those trend reversals is a very, very hard thing to do, and it can be very costly. So I'll just leave it there. I hope that was an acceptable answer. All right, so let me see what else we got here. So Andre, okay, cool. From Bucharest, welcome. All right, Andre, good to see you. I don't know, it's just crazy. I stopped talking to people about the market. Yeah, DJ, I don't know what kind of feedback you're getting. I mean, I don't, besides like the members and stuff that we have, I don't talk to anyone about the market because I don't have patience for like the mindlessness of it. It kind of reminds me of, you ever see that movie Big Short? It's a great movie because they really personify the herd mentality in that movie. And they have that one fund manager, and he's interviewing like all these people, and they're just mindlessly buying. Well, the market's going up forever, blah, 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 right? And they personified that very well. And it's kind of like that, right? People are just mindless. They're consuming all that news. They're just going along with the flow. That is the herd mentality. When I see stuff like that, and I see things pushing highs after highs after highs after highs and no pullbacks, I just get more and more cautious. That's just, what I've learned over the years. So remember, you choose when you want to take risk, right? No one forces you to play this game. It's not like poker where you're forced to make a blind bet. You choose. So I choose to stay out of most of this. That's what I choose. All right, so thanks for mentioning. Andre, if you have maybe time, see AVA USDT. Okay, let's take a look. ADA US. Oh, is that Cardano? Yeah, I thought so. Let me make sure I have the right. I'm sorry, AVA. Sorry. Okay, almost spent 3 hours on the wrong symbol. Anyway, Cardano's hype anyway. All right, so AVA. So here's the thing, right? A lot of these altcoins have been following that Ethereum lead. Okay, a lot of that Ethereum stuff. First thing, when you see that situation, okay, I know everyone's focused on what's occurred previously. That's all good, that's bullish, but you have to look at what's ahead. And historical price action can help us see what's ahead. And look where you're going, look what you're fooling around with right now. Notice this bearish pin bar, or these pin bars developing off of a previous resistance area, right? Is that a coincidence? No. There is selling activity there, and it's appearing again. Now, as far as so when I see that, first thing I know right away is I'm not buying there. It's a resistance. I don't care what Bitcoin does. I don't care what Ethereum does. I don't buy resistance levels. It's very simple for me. I don't fear missing out because it's a resistance level. If this is going to be a pronounced move, right? Same with Bitcoin, same with Ethereum. If it's going to be pronounced, then it can break that resistance without me, pull back, and give me a place to define risk from. At that point, it's aggressive, but if I'm interested at that point, then I'd be more comfortable at that point, okay? Kind of like, and it's not always easy, right, to do that. I mean, look at this breakout here, all right? Look at this consolidation here. Sometimes you're forced to go for the consolidation breakout and hope for the best, right? And in a situation like this, if you're in such a situation, you just either have to move your stop or make an adjustment or reduce your risk if you have a little green and it's hesitating like this because you're at a pretty significant resistance. But never mind this thing, Bitcoin is at a pretty significant resistance. So if Bitcoin breaks that 50K area, meaning it takes out 49, it takes out 48, it takes out 47, it takes out 46, it takes out 45, right? Goes to 44, which is the next support. That'll probably bring this thing back to here somewhere, maybe. All right, and then if Bitcoin can find its legs there, find support there, that would at least offer better reward risk. And that's why I'd treat this thing the same way. Okay, so I hope that helps. Again, when you find these situations, don't let the fear of missing out get to you. Don't let all those big mouth fake gurus with their fake videos, with their dumb thumbnails, convince you that you're going to miss out on anything, because any financial market, right, there is no such thing as missing out. There will always be another opportunity. You may have to wait, but waiting costs you nothing, and there's no risk, because if you're wrong, if you wait and this thing 10x's, okay, and you wait through the whole thing and you don't buy it, your account is still the same value, right? It's not lower. So that's the way you have to look at these things. Wait for a better opportunity if you're not in this thing, and that's really all I could tell you. And those would be your levels, right? This next support on this thing would be this old resistance right around here, which is, let me see, I'll give you a price here in a moment. 3.25 area. Okay, 3.25 area would be your next support, if it can get there and possibly give you a buy signal. I'm not a big fan of a lot of these coins anyway. I mean, you're better off going with like the leader, Ethereum or something like that. But hey, those are the levels. So thank you for asking about AVA. Olga, KSM, and Link, sure. All right, KSM. All right, let's take a look. KSM. I haven't heard from this one in a while. I remember when people were talking about this one back here. KSM, KSM. Right. Yeah. See what happens when you get caught at the top of something like this? Anyway, all right, so never mind my rant. Let's take a look at where it is now. If you notice, a lot of these altcoins, look at this pattern right here. Okay, note that pattern in your mind right there, that double bottom. And note this leg higher here. Bitcoin looks exactly like that. Okay, it looks like that, which means this thing is following. Now, there's going to be some specific hype in specific coins, whatever. So you're going to have some of these moves that get out of hand like this. Don't be fooled by those. So what you do in these situations, again, look for levels, right? I can see here we have a resistance right there. We have a resistance up in this area right about there. Those are your resistance areas. So let me ask you, if you bought this thing now, right, $395.99, you're going right into this area of, what is this here? Is that 449? 449 is your next resistance high, 449, yeah. Okay, so 390, so basically 50 points, right? There's about 50 points there before you really get into that resistance. Now, price is starting to react now. You can see some little tails on these candles. So potential 50 points. What is your support? 350. So at this moment, if you buy that, you're looking at 1-to-1 reward risk, assuming you get to that 50-point area, right? Assuming you get to that resistance. It's now showing signs of hesitation. Also, Bitcoin is showing hesitation, right? And Ethereum is at a resistance. So what are the chances that this thing can clear that, right? It's going to be hard. So if probability isn't that favorable, because you're better off buying a support, then why not just wait for a support? So again, your support 350. Watch for 350 if it can get there. Watch for this lower area here, 272 if it can get there. It's hard to believe that it will get there now, after such a move, but all it takes is some catalyst out of nowhere, and then Bitcoin pulls back, and then all these things just give it back, right? Look back here. Right? Look back here. Don't get caught in this. If you wait for a support, at least you increase your chance of getting in at a better price. What if that support breaks? Right? And now you're stuck in it. So that's what I have to say about that one. You don't even have, if you want to be super aggressive, all right, I'll give you a super aggressive scenario on something like this, since we're talking about setups. You have these inside bars, right? That's an inside bar here. You want to take out the break of that inside bar high. You want to put the stop at 367, or basically 370, this pin bar, or that doji low. Then you can play that and see if you can get anything out of that. But the chances of getting stopped out are high. So you have to keep that in mind. So if you want to go for the gamble, or you want to stay on top of that, that's up to you. But I really don't like those type of trades. Okay, so that's KSM. Okay, Link. Let's see. I haven't heard from Link in a while. So, all right, I was looking at this recently. Look at this breakout. So here's a breakout attempt, right? And look at the level. So again, people are going to be mesmerized by the breakout and the strength of the look. They're going to, oh, look at this, strong. This thing is going to keep going. Well, it might, but if Bitcoin fails, it's not going to go very far. If Bitcoin can follow through, maybe this will continue. But the thing is, look where you're buying it, right? So here's the thing. You may buy it there, and maybe you make some money there, right? Maybe it continues somewhat higher into the next resistance, which is what, around $35, and this thing's at 30. So maybe you can squeeze $5 out of it possibly. But over time, if you continue to take these type of trades, you're going to get caught in a fake out. And a fake out, if you're not nimble, can be extremely expensive because you go into hope mode thinking it'll come back, and then what? It breaks the support, and now you lose a lot more than you ever make. That's the problem with these breakout strategies, and why I really don't like them, because they require too much effort. And you may make some here and there, you may make some, but when you take a loss on them, it really makes the strategy more like 50-50, which I'd rather do less, right, and have the market work more. So that's why I prefer support. Let the thing rally off the support. I don't have to take a lot of risk. I could take a very calculated risk, and the structure is more in my favor, right, rather than I have to fight all this resistance and very little potential. Although the chart you can't see that on the chart here. We cannot see all the sell orders that are sitting in this area. We cannot see, right? Binance can see them, Coinbase can see them, but that's non-public information. All right, they're not going to show you the real sell orders and who's behind them. That's the problem. So charts don't show you everything. You have to realize what you don't see on a chart in these situations. And that's, what support and resistance are all about, but anticipated support and resistance. So I hope that helps as far as that goes. All right, so Kevin, XRP in short term. And, okay, no problem. Let's take a look. XRP. I haven't heard from XRP in a while. Let's take a look. XRP, USD. All right, so similar, right? It's a consolidation breakout. You have a lot of these going on right now, right? Look, let me show you something like DOT, right? Look at DOT. Well, that one broke out. Consolidation breakout. These are all consolidating. They break out, right? This one looks very similar to the Ethereum situation, right? Uni looks very similar, right? This one, see how it's failing? See that? See this little failure candle here? That is not what you should see after a breakout. Anyway, so let's go back to XRP. So it's a similar situation. You have this attempted breakout, but if it fails here, you're going to run into those problems. So either you wait to see if it pulls back to the range low, right, which is here, $6, right, around there, $5, and see if you can get a reversal off of that, right, kind of like this little higher low situation. If you had taken that higher low, it's like at this point, you just let it ride and see if it can perform or not. I mean, that's all you would do at this point, because there's no sell signal there, right? You would wait for the sell signal. So either let it ride, see if it breaks out, or if you get the sell signal, you adjust. Otherwise, if you want to go for that breakout, like I just said, you're going to take a larger risk because your stop is going to have to go somewhere below that 106, and you have to be on top of it to make sure you don't get the fake out candle. Keep in mind, like I always have to remind people, these things, especially XRP, don't trade on their own most of the time. As you can see, Bitcoin is doing a similar thing. If this candle on Bitcoin fails, which it might, it's still in the process, it might be a failure. It's too early to judge. I can't say it's a failure. It's not red, and we haven't taken out the low. So it's just an open candle. But if this follows through as a failure, you're going to see a lot of pullbacks on those consolidations. And the problem with that is it catches a lot of people, and now they're all going to bang it out. Now, I'm not saying that that's going to cause Bitcoin to go back to 44K or anything like that, but why not get it at a better price, if you can? So those are the scenarios for something like an XRP, following Bitcoin, using Bitcoin as your guide. All right, let me see how I'm doing with time here. Okay, so some more. I got a few more minutes. Thank you for the questions. Okay, Schwartz. Oh, Schwartz put a nice thing here. Okay, please show a little love. Okay, yeah, if you want to press the like button, that's cool. I appreciate that. It's always helpful, I guess, for the YouTube algorithm. But like someone said, I need to make some funny looking thumbnails to get some more people to watch. Anyway, all right, let me see what else. Thanks, Schwartz. Let me see what else we got here. All right, I'm just catching up. Hold on. Just catching up on the chat. Where am I? Okay, David. All right. DJ. Yeah, we bought them in January and February, right? And yeah, he's talking about the SQQQ calls. I still have mine, and they're worth. I bought them for $2.50, and they're worth like 50 cents or whatever. But you know, the nice thing about that, even though they've lost what 80% of their value or whatever, 90% of their value, whatever the percentage is, at least they don't go to zero because I have so much time left in them, right? As opposed to if you're short shares outright or whatever, you're taking a lot more pain. So that's the nice thing about, you know, options. All right, Janet Jr. Sorry, okay, but if everything in your famous rules checks out for the swing trade on the 1D chart, what exactly would you be looking for on a 12-hour? Okay, so same thing, Janet. You know, the thing is, the whole point of the rules, it's not that, you know, my famous rules. There's really nothing that special about them. What they do is they keep me out of trouble. They protect me from myself, basically. They protect me from me being emotional, or me afraid of missing this, or me afraid of missing that, or doing something on a hunch, right? That's what the rules do. They basically minimize my second guessing. And that's why they're so good. Now, you know, you can have any set of rules. It's not that mine are better than someone else's. It's just you have to have some kind of structure to your decision-making process. Now, I would be, for an 8-hour chart or a 12-hour chart, it would be the same thing, right? If I was looking at a 12-hour Bitcoin and I'm applying the rules, right? Like I want to see, here's a 12-hour Bitcoin. If I'm making judgments on a 12-hour, again, there's really no advantage to doing that unless I'm just looking for some more granularity. In a situation like this, that's telling me that there's a bearish inside bar and that a sell signal could develop, right? Once this thing closes and it takes out that low, which, you know, would be an earlier sell signal compared to the daily chart. But does it really make a difference? This can also fake out. So that's the thing. Where something like this could be helpful is, look, you can get like an earlier signal somewhat on something like an inside bar to go long on these things. You're just getting more granularity. But where there's more granularity, there's also more potential to fake out. I mean, what if you looked at this bearish pin bar over here and you say, oh, it's a short, okay? And you shorted it only to get squeezed right there like that. Meanwhile, the daily chart never ever said to go short. This is not a short. So that's something to keep in mind. Right? That's why we don't really use these charts very often. Also, I like to look at smaller time frames. They're helpful when you're looking to trail a stop or maybe lock in some profits earlier and you want a specific signal. They can be helpful in that regard. But usually entering a new trade, they're nothing but, you know, trouble. So that's why it's just easier. You have to keep things simple in this game. Simpler is better. All right, more is not better in this game. Less is more. So thanks for asking. Let me see. Loves Robinhood. Well, DJ, you know, I know I give Robinhood traders a hard time, but someone has to take the other side of our trades, and that's what they're famous for, right? That's where, if you're a Robinhood trader, the reason why I pick on them so much is because they're making their decisions usually based on hunches, on feelings, on reactions, or on news, the worst possible pieces of information you could be making decisions on, right? Because it's not like the Robinhood platform offers you any kind of technical advantage. All it does is give you easier access to the market. And if you're doing that based on like rumors and you're just acting on your intuition and you're acting on your feelings or what everyone else is doing, my dentist told me to do it. Well, you know, you're going to get caught like the rest of the herd. And that population, they're taking risk off of someone else's hands. Whose hands do you think they're taking risk off of? Right? Usually professional or institutional traders. That's basically what they're doing. So it's good that they're there. All right, Olga, KSM is an altcoin. Right, okay. Rune as well, okay. Rune. I haven't heard from that one in a while. Let's see, how's that doing? Oh, it's the same story, right? Although a lot of these altcoins look very similar, except for some of those breakout ones that you had. Look, it's trying to break. You have the higher low in place, but does it break higher? Does it break out of this consolidation, or does it fail, right? And again, following Bitcoin. So what you have to decide. Do you want to take risk on something like that? Your swing trade risk is defined from this level. What is that? Basically 9, we'll say like 9.25, right? Maybe a little lower. You want to make it 9 even. You can round it if you want. Right now, this thing is at basically just over 10.5. So you're in the middle of this little consolidation right here, right in the middle of it. All right. More importantly, you have to look ahead, right? Where are the resistance levels looking ahead? You have one about here in this area, and you have one up here. That's a pretty clear one right there. So the upper one, okay, that one looks like there's some decent potential, but this one, what is this here? That's around 1374. Your reward risk still makes sense, even if you jumped in this type of situation, okay? As far as levels go, because you're making more than 1.5 or basically 2 to 1 reward risk based on those levels. If you're exiting, which you should be, once you reach greater than 1 to 1, you should start taking something off the table. It's just a good habit. And you have the bullish structure to go with you here. But the risk that's not obvious on this chart is the Bitcoin risk or the Ethereum risk. Because if they pull back, no matter how nice this buy signal looks, it's going to break the support. Okay? So that is what you have to keep in mind. It's not just about this single chart alone. It's this chart relative to Bitcoin. So thanks for asking. Let's see what else we got here. So okay, no problem. Yeah, right. So but see DJ, I knew those at least were altcoins, so that's why I didn't look at the wrong symbol for 3 hours. All right, cool. Okay, did I put KSM? I put KSM USD, right? Let me just double check. Yeah. I knew that those were altcoins. All right, but thank you, DJ, for just putting that out there again, because yeah, it's sometimes I don't know and I look at the wrong symbol. Jesse, hey Jesse, what's going on? Jesse from Poughkeepsie, right? See, look, he doesn't have to tell me anymore. I just know. Right, DJ, more like 3 hours. David I think David from Spain, right? Okay, David, I remember your name from Spain. Mucho gusto, because in Spain they have a different accent. I don't even think I got that right. Anyway, when to enter ETH, ADA, or SOL. All right, well, we looked at ETH earlier, right? We talked about the supports. Let's take a look at ADA, and we can take a look at SOL. Look, ADA is a big hype coin. We know that. Look where you're buying if you're buying into this thing. I know a lot of people are excited about it. Please avoid the hype on these things. You're at a resistance, okay? Potential pin bar developing too. I mean, nice move, beautiful move. I mean, what's this thing at now? This thing's at almost $3. Are these all-time highs? I think these are all-time highs for this thing. Okay, I mean, that's all good. If you're in this, you should be taking money off the table. I hope you have. Now, he's asking when to get in because obviously he's not in it. Okay, well, these are definitely not good prices. Very risky, right? Very high risk. So you want to find your supports. Your first support is right here. Notice old resistance, new support. It bounced off of there recently. So obviously someone else has the same idea. Wait for another test of that support. You may get a nice little double bottom situation or a slight lower low. That would be at least a situation that will give you better probability compared to this. Also, the next support after that is going to be around here somewhere, right around this level here. So what level is that? So you're looking at around $1, maybe $1.90 as one area to consider. And then you're looking at $2.50, right? Those are your levels. So if it can pull back to one of those levels, you may have an opportunity if price action can confirm. If it never pulls back to one of those levels, let's say it runs to 350 or whatever, let's just say, well, your next support after such a run is going to be this old resistance. Okay, and at that point, that's where you'll be looking to pull back to that area for potential long. And you're going to have to measure your risk at that point. We can't measure that now because it's not a support yet. All right, so that's how I would treat something like that. But again, look, all the hype in these coins, right? All the hype. Look, remember when Cardano was over here? I mean, if you got fooled into buying it at these levels because some fake guru told you to buy it, you had to take all this pain, right? What was that? From $2.47 to basically $1.10 area, right? Almost went to $1. Yeah, went to $1 at that point. So that's the kind of risk you run with these things when the hype comes out of them. So just something to keep in mind. If you're going to get involved, at least do it at a more attractive level. So that's Cardano. Let's look at Solana. Let's take a look real quick. Oh, this thing is still vertical. All right. So again, if you're not in this, stay away from it. Because again, you're asking for trouble, right? You don't know where the top is. You're playing the top tick game. It may go higher. It may not go higher. You don't even have one of these little consolidations to play with here. It's just a vertical candle. Not only is it a vertical candle, but the previous candle gave you a pin bar, which means someone is selling there, right? At least from what we can see recently. Not a good place to buy it. What do you do in this situation? You're going to have to wait for a pullback, and your first support is really right there. That's your first reasonable support. This is another hype coin, $82, right? This thing's at $127, $127. Yeah, don't get caught in this nonsense. Wait for that support. If you want to be more aggressive, you know, you have this little hesitation right there. You can look at that as a possible support, or maybe in between these two, as you can see, these little hesitations. So what is that? $100, all right? That makes sense. Nice round number. Those are your supports in something that's generally strong. So look, I'm not trying to discourage people from buying something that's strong, but you're buying at really low probability prices. And I could have said that at much lower prices and you would have missed this move here, but I'm only interested in the risk. Now, what you'd like to see, let's say this thing never pulls back to those two supports that I just outlined. Let's say it never pulls back. What you want to see unfold next is this, just like something like this, where you get a consolidation of some kind, you want to take the breakout, right? Kind of like just basically a repeat of this. If you get something like that, that's more acceptable than buying this. At least you could measure your risk from the consolidation low, and you have a point of reference to get out if you're wrong. And then you see where it goes from there. But don't get excited or lured into these things because it's just nonsense like all the other ones. Okay, I know no one expected this and they have the special technology. I've heard it all. The fundamentals, blah, 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 blah. To me, it's the same thing as the rest of them. All right, I've heard IOTA and all these other ones and blah, 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 and blah, 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 and whatever. So wait for support levels. Get all that fundamental stuff out of your mind. Don't get emotional about it. Just wait for support. At some point, price has to test a support, okay? Maybe not the supports I just mentioned, but it has to develop a support somewhere, and that's really where you want to become interested in it, not chasing the highs. So thank you for asking. Yevgen, welcome from the Ukraine, from Kiev. Well, thank you for joining. I wonder what you do think about ETH goes to the moon, okay, and BTC struggling around resistance. Do you think that this is okay? That's an interesting question. So Ethereum, basically Ethereum outperforming Bitcoin right now, while Bitcoin kind of lags. It's not a good sign, I can tell you that, because they should be moving together. So it does create some concern. I mean, either way, I'm not interested in buying highs, so it doesn't really matter too much to me. But when I see something like that, it's like, all right, if Bitcoin can't continue, right? If Bitcoin can't follow through on this situation, then Ethereum's probably not going to go much further if this thing turns red. Okay, if we get the failure candle, I mean, it's fluctuating right now. Like I said before, you can't judge an open candle; it has to close. But if we get the red candle and we're testing, the lower part of the range again, where is that going to bring Ethereum and all these other nonsense coins that are just going crazy? Again, don't get sucked into that stuff. When you see things going berserk, if you're not in them, then you've missed it. So all you can do is wait for a better level. Identify that level in advance and then just sit back and wait. It may take a few weeks. It may take a month, but you at least will not be so stressed out, and you're increasing the chance that you're getting it at a better price and that it will go your way once you get into it, okay? Assuming that you're taking the appropriate risk rather than chasing it, and now you become basically a slave to the chart and you're at the mercy of the market, because if it pulls back, you bought the high, now you get stuck in the thing, right? And a lot of people get caught in that, and it's really not necessary. You don't have to do that. Just wait it out. Waiting is better than taking action most of the time in this game. Okay, No problem. No problem. I appreciate that, Kevin. Thank you. Shubham, hey, what's going on, Shubham? If you tell me what's NFP data tomorrow, I will tell you. Okay. Yeah, look, I have no idea how NFP will come out. And when it comes to something like NFP, I'm glad you mentioned that, Shubham. When it comes to something like that, NFP, you have to realize that logic doesn't really apply, because the report may come out bad and the market may like it for some reason. The report may come out good, and the market may not like it. So that's why I don't apply logic to those situations. I just want to see how it comes out. Actually, I don't really care how it comes out. What I want to see is how the market reacts. That's all I want to see. Does the market go to new highs, or does the market pull back and we start breaking supports? That's really all I want to see. I really don't care what the outcome is. So thanks for mentioning. Yeah, I saw the dollar index. I was talking about that earlier, and it looked like it was breaking lower. Has it changed? Has it changed going into NFP? It still looks ugly, sitting on its lows there, but that's a support area, right? So that's why I'm not making any judgments on that dollar, especially pre-NFP, because that can change real quick. So thanks for mentioning. ETH was outperforming Bitcoin. We all knew. Okay. Right. So again, see things like that, Shubham, don't get opinionated by things like that. We can make historical observations and say, well, remember when this did this, that did that, right? That's okay. But sometimes, the environments are always different, and you just always have to keep an open mind. That's all I'm saying. Don't become opinionated where it will force you, or it may lead you to do the wrong thing, right? Just let the market just accept that Bitcoin is the leader, and if it can't rally, most likely none of these other things are going to go much further. With that being said, if they pull back, you're looking for supports, right? Because so far, even with Bitcoin stuck at 50K, the structure is still bullish, all right? Because I'm not bearish on Bitcoin. I just don't like to buy resistance levels. I prefer a support level. So all we need is a little healthy pullback, right, to a support level. I know everyone's going to get bearish on it at that point. That's normal. All the gurus and everyone else that thinks they know what they're doing, blah, 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 they're all going to be shorting it, and they'll give us a nice buying opportunity. That's all I'm looking for. I like a place where I can measure my risk. I know that probability is much more in my favor than chasing a high. That's really it, So that's why I don't have any opinions. I don't know where Bitcoin's going, right? I don't tell people Bitcoin will be at 100,000, in a couple of months. So just buy it. There's no way to know. All right, we could talk about fundamentals all day long, and their project is this, and they're doing that, and they're going to upgrade this, and blah 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 blah. It all means nothing. Okay, all you need is Elon Musk to come out and say Bitcoin sucks. Okay, that's all he needs to do. Come out and say that, and Bitcoin's back to 30K. So it's all, it's all based, everything is based on perception. Like I was saying the other day, this game is a 95% mental game. And you need to be able to see through the noise. And most of what we consume, whether it's news, whether it's, YouTube video, whatever, most of it is useless noise. Most of it. You have to realize that. You have to realize that this game is really about risk and determining where a risk makes sense and where probability makes the most sense based on things that you cannot see. All these fake gurus with their charts. Oh, well, the oscillator RSI is doing that, so it must mean this. And all they're doing is wasting everyone's time with random opinions. That's all they are, random. So you need to be able to think ahead of the market, first of all, meaning you have an area to anticipate. You need to let the market prove itself a bit, okay? Like that's what we're talking about with these reversals and stuff like that. Then you need to be able to figure out your risk and decide if it's worth taking based on the potential reward. That's a swing trade. And if you have some rules to help guide you in that process, then you're less likely to make these reactive decisions, which often will lead you to losing money. Okay, yeah, they occasionally win, but in that type of situation, it's the same performance as a casino. You go to a casino, you win sometimes, and you're like, yeah, I'm going to go back because I'm going to win again, right? I just feel good about it. And you're never going to win in a casino, right? Playing most games, even playing poker, you can be there are such things as professional poker players, but you don't see a professional slot machine player, right? Then there's a reason for that. So anyway, okay, so Yevgen, okay, there again, it's all about levels. So don't get caught up again with the patterns. When it comes to all these patterns and stuff like that, really all you're interested in are like reversal areas, right? The higher low, the double bottom, stuff like that. And you're looking for support and resistance, and you're looking for those levels in relation to a larger structure, right? Are we in a bearish trend? Are we in a bullish trend? If we're in a bullish trend, which most of these things are, I mean, Bitcoin is in a bullish trend. There's nothing bearish about this, right? Nothing. Then we should be interested in support levels, and resistance levels are likely to break. That's all we know. But what is the risk? Like, if I believe that this resistance level is likely to break, which is very possible, why am I not willing to take the risk here? Because I don't like all of this risk. I just don't like it. It's too much for me. So I'd rather wait until the market gives me a better opportunity, which at some point it will. Even if it clears 50K and pulls back to it, at least I know I have a reliable level that I can work with now. This buying potential fake out here, which is what this is at the moment, is just unnecessary. You know, that's the way I see it. But I'm very conservative. So I'll leave you with that. Anyway, I got to wrap this up. Let me see how, yeah, I got to wrap this up here. So how do you know when to get out from a hype coin making all-time highs? All right, so David, that's a good question. First of all, if you're in something that's vertical, all right, like some of these coins we looked at, if it's vertical and there's no sell signal, you just stay in it until it gives you a reason to sell, right? Because you might as well let it pay you. You're not going to top tick it. So get that out of your mind right now. If you think you're going to maximize, get out at the top, that's the same as gambling. It's a very low probability, and if you manage to do it, it's just random. So the best thing to do is to let the market give you a reason, right? Let it produce a sell signal. So let me find what's pushing highs. Let's go back to ADA, right? Is that pushing? That's pushing highs. Well, it's not exactly vertical, but one of those vertical coins. Here, I think Uni was also looking vertical, right? So here's a nice example of something that was going vertical, right? Trying to go vertical or whatever. And then it gives you a potential reason to sell, which is this red candle. So when you're a hype coin, looks like that, and you get a red candle, like an inside bar, something like this, and it takes out the low of the inside bar on the next candle, because again, you're using daily candles. You're not using 4-hour candles. If you want to use a 12-hour candle to get a little bit of an earlier warning, okay, fine. You know, if you're trying to refine that a bit, but that's what you're looking for. It takes out that low, you got your sell signal. That's a good reason to start getting out of more. But even then, that doesn't guarantee you got the top. It may consolidate a bit and work its way higher. So you have to decide how much you want to get out of, right? But if you have a winning trade, you definitely should get out of all of that, you know, for a profit, and you should not let it go back to break even, okay? But that's really what you're waiting for. You see some of these stupid coins, how vertical they go. So you might as well give it that chance until you get that sell signal. And this would be a good idea of what it starts to look like. All right. Now, you may get this signal right here. You may get that. That's not an actual official signal because there's no next candle, right? You need the next candle, and it needs to take out the low. That's what your signal looks like. The next candle may open, okay, and the next candle may do this. So in that situation, obviously you want to stay in it, okay, and just let it do its job. So I hope that answers your question. Okay, use this Tidewater oil. What is that? Tidewater oil? Okay, DJ, I'm not sure what that is. Use this Tidewater oil. Anyway. All right, so I hope that answers your question, guys. I got to wrap this up here. Let me see. Anyone? Oh, I still have some people watching. Okay, cool. So anyway, I want to thank you all for taking the time here to watch my stream and answer and ask some great questions. It's always nice to see the community here. I think we learn as a group, and we also spot some potential opportunities, which is the whole point of this. We spot some potential opportunities that we otherwise might not have spotted on our own. And it allows us, hopefully, I'm delivering to you some realistic perspective on these things because there's a big lack of that everywhere, okay? People have these outrageous expectations, and that's why they get into trouble. And my idea is to give you some realistic expectations and manage risk so at least you know what's within reason, Okay, and then you have to go from there with your own risk tolerance and your own objectives, right? So anyway, cool. Any coins from top 10 market cap don't even exist today. That's interesting, Shubham, that you mentioned that. It's a stock. Oh, okay. Tidewater Oil. Okay, cool. Anyway, all right. Yeah, I gotta wrap this up, DJ. I would take a look at that, but I just got a couple of minutes here. I gotta turn this thing off. So, yeah, Shubham brings up a good point. You know, as far as the top 10. I mean, look, things change. So you have to treat, when it comes to the altcoins and Bitcoin, they're still highly speculative. I know there's all this talk and people imply and assume that there's all this value there, true value, but it's not. It's just perception and hype and people gambling. I mean, that's really, they're like penny stocks, and that's how you have to treat them. If you treat them like a penny stock, you know, I think you can do better because you know you're involved in a risky asset, and you know that should help you shape your strategy and how much money you should be putting into these things. But people that just put everything into these because they think that this is going to the next get rich kind of thing, they're nuts, because these things can go to zero just as quickly as, you know, they're rallying right now, which is not uncommon in the penny stock world, right? It's the same type of deal. So treat them like that. A real true asset is something that pays you for being a holder. Now I know a lot of these coins, they try to emulate that with their stake rewards and all this other nonsense, but their underlying thing, their coin, is worthless. It's not worth anything, right? It's not like you have a share of a company that produces a product of some kind and they're paying you part of their profits and, you know, dividends and blah blah blah, right? It's not that. So they try to emulate that to get you to hold on to these coins, which, okay, fine, but no matter how you slice it, they're still highly speculative. So just don't lose sight of that, okay? If you want to really truly invest, and that's really, you know, you want to find conservative stocks that pay you to hold on. And there's plenty of those. It's not like there's a shortage of those. You just have to, again, figure out, you know, how much you're going to risk in that area, because it's always about risk, whether it's inventory or it's a swing trade. All right, so anyway, I can talk about that forever and ever and ever. Right, just Bitcoin and Ethereum exist, right, and they're the leaders. You notice all these other coins that do it better, right? IOTA solves the scaling problem and blah, 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 blah. Meanwhile, Bitcoin is still the leader. Ethereum is still the leader. So that's why I don't give all that fundamental hype and talk and whatever, all these great ideas, I just take it with a grain of salt. It sounds great. It sounds exciting. If you want to throw $100 at it, okay. If you lose the $100, who cares? If the $100 turns into $1,000, hey, that's great. But there's no way that these things are worth putting $50,000 into. Unless you have $1 million and you want to throw 50K. Well, if you lose the 50K, it's like losing $100 if you have $1 million, right? That kind of thing. But if you only have 50K, you're crazy if you're putting 50K into these things. Anyway, all right. I like, okay. I am Bobby Junk. I am very conservative. It's just the way I am. Also, I have to be, when it comes to taking trades and publicly sharing ideas, I think it's better to be more conservative than aggressive, because for one, there's a lot of people don't understand how nimble you have to be. And that's part of it. Like personally, I'll take more aggressive type of trades, but I'm nimble. And if I don't like something, I'm out. There's no question, right? There's no hope mode for me. I'm out. I take the loss, I'm out. A lot of people aren't going to do that, and they get caught. Right, and then their $10,000 turns into $5,000, or very quickly, or worse than that. So that's why I really push more the conservative aspect of it, because I think it's just better for everyone, you know. And then as you gain more experience and you're more nimble as far as decision making, then you'll learn how to be more aggressive on your own, right? And that's the best way to do it, I think. Anyway. Okay, cool. I understand this now. Okay. Well, yeah, true, Shubham. Forex has to be the worst market to trade and to start out. Not only because of the way that the markets move. That's hard enough. Okay. It's what's working against you, which is your broker. Okay, in the Forex market, I'm gonna leave you with that, and I'm gonna turn this. I know I keep saying I have to go, and I keep talking because I can't stop. In the Forex world, your broker trades against you. Or if you don't know that, it's a big conflict of interest. Okay, they have all this legal talk about, you know, how if you look at the fine print, they have all these ways around it sometimes about how they explain that. But usually they're taking the other side of the trade. If that's the case, if your dealer is taking the other side of the trade, that means it is not in their best interest for you to win. That's why you can't day trade or take small bites out of Forex, because it's coming out of their pocket. So the spreads alone, usually on most Forex brokers, make it impossible, right, to really make money consistently. It's very, very hard. You have to be really good, for one, and it's just not worth it. That's why, do you ever see a proprietary day trade firm? Like, there's not too many of them around, but do you ever see them trading Forex? All the ones that I know of trade stocks. Why is that? If Forex was so, Forex is basically for people who have small accounts. They give them a lot of leverage, and it's a great way for Forex brokers to make money because they're betting on the herd, right? That's the thing with Forex. We trade Forex, but for swing trades, but we do it very carefully, and we don't have a lot of trades in Forex. But definitely, I see a lot of these videos too pushing Forex because they appeal to small accounts, and oh man, they're pushing Forex. Like, Forex has got to be the worst place to try to make money. Anyway, all right, you guys. So I'm going to leave you with that. Again, I know I talk too much. I got to wrap this up. Thank you so much for taking the time here with me today and asking these great questions. If you'd like to know more about Greenbridge, please click on the show more thing on the video here. There's a link. We have a chat room. We have swing trade signals and all that stuff, but things have been very slow this month as far as signals. So don't come into the 7-day free trial expecting lots and lots of trades. I would say give it some time first, and then wait till the market picks up and volume starts to come back, and perhaps we'll have some more activity. I don't want people to start it and then be like, oh, this sucks, right? So just be patient, take your time with that, and wait for the market to pick up. Otherwise, that's that. All right, everyone. So enjoy the rest of the day or the rest of the evening, wherever you are in the world, and thank you so much for watching.